One of the top questions I get is about the chart of accounts. These range from how to set it up to what it is and why is it important. The chart of accounts is the foundation of all QuickBooks products, and if you do not understand this, you will not understand reports or even how data is coded. This applies to every single business industry. Even if you are not doing any of the inputting into your QuickBooks product, it is still fundamental you understand your chart of accounts and also that you and the person doing the inputting is on the exact same page when it comes to how to code all transactions. Simply put, the chart of accounts is made up of the bank accounts, assets, liabilities, equity, income, cost of goods sold, expenses, other income, and other expenses. It is simple and straightforward, and it is, but I have found in my 20+ years of using QuickBooks products, most people do not understand it and/or it is not correctly set up from the start. Every single transaction in your QuickBooks product is tied to the chart of accounts. Again, if you do not understand this, then you will not understand the reports and data presented to you. Also, if you or the person doing the coding inputting into your QuickBooks and do not understand the chart of accounts, then the data will not be reliable and accurate. While each industry is different, and we do offer different charts of accounts for many different industries, all businesses function very similarly when it comes to money and bookkeeping. All businesses have checking accounts, assets, liabilities, equity, income, cost of goods sold, expenses, other income, and other expenses. Where businesses differ from industry to industry is more in the names of the income accounts and cost of goods sold accounts. What we have found in our 20+ years of experience is that in general, the bank accounts, assets, liabilities, equity, expenses, other income, and other expenses are uniform across all business industries. There are only a few industries we may add or take away from the general expense category because they truly need to track something additional or will never track. An example of this would be for realtors. We track their fees for the access keys they use to show properties, and that is not an expense we track for other industries. As I mentioned earlier, each transaction is tied to the chart of accounts. What does that mean? When you create an invoice, the item must be set up correctly, as you cannot create an invoice without an item in any of the QuickBooks products. If you are using a credit card, not to be confused with a debit card attached to the checking account, then you need to understand how the credit card feature is tied to the chart of accounts. If you are using the Enter Bill feature, you need to understand how that is tied to the chart of accounts.